The global growth outlook for the second half of 2025 remains cautiously optimistic, in what is likely to be a story of two halves. First half growth has largely come in better than expected due to front-loading of manufacturing and exports ahead of anticipated US tariffs. However, with the upcoming 1st August deadline imposed by the US for reciprocal tariffs and also the threat of sectoral tariffs on copper, semiconductors and pharmaceuticals, a moderation in growth momentum due to tariff-related and other policy uncertainties appear very likely. For instance, market anxiety over the pressure on Fed Chair Powell to cut interest rates also have not fully ebbed. That said, recent announcements of US trade deals have lifted market sentiments. Japan will see lower tariffs of 15% as opposed to the initial 25%, while Indonesia and Philippines will face 19% tariffs. While these tariff levels appear to be less steep than what was earlier announced on Liberation Day, there is still some skepticism if this is indeed a sweet deal, given the need to have zero tariffs for imports from the US and also the other concessions that are made, and these include commitments to purchase US aircraft and energy goods amongst others. Uncertainty also remains over sectoral tariffs and transshipment tariffs, particularly those containing Chinese inputs. At this juncture, some payback in the second half due to the earlier front-loading appears plausible. The silver lining is really that while the US Federal Reserve is currently in wait-and-see mode to assess the anticipated inflation pass-through from higher tariffs when implemented, they are still likely to trim its policy rate given the slowing growth trajectory in the US economy. Elsewhere, we also see Asian central banks taking the opportunity to ease monetary policy settings in order to prepare for the potentially more challenging period ahead. For Singapore, our 2025 GDP growth forecast has been upgraded to 2.1% year-on-year, and this was largely due to the upside surprise in a first half growth of 4.2%. MAS has already loosened monetary policy settings twice this year in January and April as core inflation subsided. Looking ahead, the Singapore Economic Resilience Task Force has also announced a new Business Adaptation Grant to support up to $100,000 per company with a co-funding component, but SMEs will also receive more help to cope with impending US tariffs. So net-net, we are actually in a good place.